If the general public really understood what happens in the financial world, most of the big businesses and financial service firms that you guys know of probably wouldn't be around anymore, or they'd be a lot smaller. You see, when it comes to financial planning and financial services, there's a lot of regulations that dictate what we can do and say online in public spaces. There's things I can discuss one-on-one with the client that I can never ever post on YouTube without getting hit with tons of cease and desist orders or potentially losing my license. So while the goal is always to give as much education as possible to you guys through free platforms like YouTube, it's important to understand that not everything you read online is going to apply to you, and that there may be some things happening behind the scenes that we're not allowed to tell you publicly. And really the only way to get down to the bottom of it is to talk one-on-one with a financial professional. I'm not allowed to go into great detail on different types of products and firms and providers out there. I can give you 3 red flags to look for when looking to hire a financial professional. So the first thing to look for is you need to be cautious of advisors who work for a company that have their own products in their name. So for example, back when I got started, I actually worked for a short period of time for Farmers Insurance. Before I was a financial advisor, and I was only allowed to sell Farmers Life Insurance or Farmers Car Insurance. When hired on at AXA Advisors, I was only allowed to sell AXA Insurance, AXA Annuities. So when you're dealing with a professional, that company has its own products, they incentivize their agents to use their own products. So they usually pay higher commissions, they have salaries, all kind of different tricks behind the scenes to incentivize their agents or producers or advisors, whatever you want to call them, to sell their or push their own products. So if you're working with this type of people, it's important to understand that that conflict of interest may be there. And if they are telling you about their own company's product, you want to take a step back, or at least ask them why that is and why it's better than a different competitor product or strategy. And you also want to go outside of that, find someone else that works for that other company or somewhere else and see what they say to make sure the opinions line up. And what you're often likely to find is everybody's going to have their own opinions and strategies on the way you should do things. But when it comes down to what's going to be best for you and who to trust, the only way to do it in my eyes is to find someone that you can hire and pay for their professional advice. So you want to take the sales commissions out of the game. So by doing that, you're going to basically take the whole sales and compensation part out of the relationship. If someone comes and pays someone directly and says, hey, I need help, they're going to show up and give you the help that you paid them for. It's a different type of service. The financial service industry is ancient. It used to be heavily product sales, still a lot of it that is around today. Most advisors now go on the AUM model, otherwise known as assets management. Hey, if you give me X amount of dollars, I'll manage it for you, yada, 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 and they get their recurring fee. But what this does is it basically makes it so if they can only work with people that actually have money liquid available to move to them. So if you're a state employee, all your money's locked up in Plan 3, it makes it really difficult to find quality help because these advisors can only get paid by managing money, and if your money's locked with the state, they can't help you. Oftentimes they'll try to get you to do like a Roth account with them, 403, something small they can manage. And while that might put you on their books, because you're not paying them a lot, the quality of service you're going to get may not be what you want or need. And oftentimes it limits the relationship to just talking about that one account or that investment. They're not going to go overly in depth in your whole planning spectrum. They're not going to go into your income needs, your tax planning needs, or anything like that, because you're just not paying them enough. Even if you offered to pay them up front in a lump sum, many of these advisors don't know, how to accept that. Maybe their companies don't allow it, and they really don't know what to deliver on if they're not managing your assets. A lot of these places, they base their service and expertise and quality of advice on the performance of the account or the investment management piece of it. And if you take that away from them, a lot of them don't know what else to do or deliver on to justify their fee. If you ever come across a firm and they say, our minimum investment is $250,000, $500,000. Really, that's all that is a smokescreen. They really don't have an asset minimum. They have a fee minimum. But it's a lot easier to tell someone, hey, you need $250,000 to work with us, instead of saying, hey, our minimum fee is $4,000. It's a little bit scarier, pushes people away. But when you get down to it, that's really what it is behind the scenes. So again, the first one to look for is any advisor that only gets paid when they tell you to do something that other company does. Usually that's something you're going to watch for. Second red flag, I kind of already spilled into it, but it's if their advice hinges on you buying products from them or managing money, typically it's not the way to go either. So to reiterate, if the only way I can help someone is if they have an account with me, oftentimes that limits who I can serve and limits the advice I can give you without going hours on end and not being compensated justly for that. Now, don't get me wrong, there's tons of advisors that do this all the time where you have a $6,000 Roth IRA account and they want to meet with you every 3 months, 6 months, and they're always trying to get you to invest more with them, buy other products. And what I found, especially one firm in particular that again I can't name, them on YouTube in a public space, is they're going way out of the way to make things overly complicated just to get a little extra income. So this company keeps pushing backdoor Roth IRAs to state employees. Now, backdoor Roth IRA, if you don't know what it is if you make too much money, you can't put money in a Roth IRA. They say, hey, put it in this IRA, and then you convert it into the Roth. So a bunch of moving parts, complicated strategy. Also has to be reported correctly in your tax forms, otherwise it doesn't count. And then all it really does is gives, you have an extra $7,000 in your Roth, they get paid a little bit more. But all that paperwork, hassle, explaining, it really just isn't worth it, especially for state employees, because now you have Roth deferred compensation plan. You don't need backdoor Roths anymore. Unless you're maxing out all 30 some odd $1,000 in this Roth ECP, the backdoor Roth is something that I wouldn't even bring up. In fact, 10 years of specializing with Washington State employees, not once have I ever done a backdoor Roth IRA, just because you don't need it. Between the Roth DCP, Roth 403Bs, there really isn't much need for most people to even consider doing it. In the few cases that I've seen someone do it either on their own or by recognition advisor, they have not been done correctly and they have not been reported correctly. So when they show me their tax forms, they're missing the key form that notified the IRS of the backdoor Roth part. So without that one key form, as the IRS is going to be considered an excess contribution into the Roth IRA, which comes with penalties for every year that is not removed from that account. And now you have to figure out how to take money out of the account and pay these penalties, and just creates a whole hassle. And again, this all comes to advisors that the only way they get paid is from accounts they manage. So they try to find all these complicated strategies just to squeeze every bit of juice they can from that client. When in reality, if you're just able to pay someone, hey, what should I do? And they say, hey, do this deferred compensation Roth. Yeah, I'm not going to get paid for it, but it's a lot easier and you avoid all the tax hassles and paperwork. It's a lot better of a recommendation for a lot of people than considering the backdoor Roth IRA. The other thing that this creates is it becomes an investment-focused relationship. They're not going to look outside of the box, such as tax planning or estate planning, which is why those forms get missed, why people will retire, look at their beneficiaries and why their ex-spouse is still listed on there, or they don't know the difference between the types of beneficiaries and how if someone were to pass away, they could accidentally disinherit one entire side of their family tree. So estate planning is another big factor to consider when your investment relationship with the advisor is only on one individual account. That's all you guys talk about stocks and performance. You overlook all the other important planning areas. Little mistakes like this will creep up on you. So you see there's a lot more to it when deciding who your advisor is. And because we can't say so much in public, I'm actually creating my own private community in order to offer more detailed help to the general public, to help you guys get the education that you need without having to book one-on-one consultations, without having to move money, buy products, or buy a financial plan for me or anyone else. This is just going to be a private community that's there to support each other, to give general information. That's going to allow me to go into a lot greater detail without having to worry about what another company might think, or having to worry about getting cease and desist letters for going, too deep into their products and calling them out on things that don't make sense, and sharing fee schedules, which a lot of them don't like that. That's why they hide it in their disclosures. So I'm going to dive into all that in that student private community. If you're interested in signing up, make sure you're on my email list, or just click on the link in the description below to sign up for it. So now, what does a good financial planner look like, or what do I think or look for if I were to hire an advisor? So being doing this for about 10 years now, what I'm seeing is the general trend of the industry, and again, this is slow moving, is a lot of them are moving to this whole, paying for your time up front. So it's moving away from like the products and the insurance route, and it's more of just, hey, I'll pay for that every time. I'll pay for basically project-based fees. So, hey, I need a plan. Here's whatever the fee is, and they help you get tax planning, retirement, income, whatever help you need with, all sorted out for fixed costs, without the worry or need for buying products or moving money or anything like that. So that's the trend that's coming in the industry, and so that's what I would personally look for if I was hiring a financial advisor myself. When looking for a financial planner, you want to find someone that is the quarterback that's going to help you do the planning. Doesn't mean they have to do it all for you. For example, if a client comes in and they need help filing their taxes, I'm not a CPA, so I'm not going to touch that thing. But I know a lot of good CPAs in Washington that will be happy to help you guys get that set up. I can refer them out. They can get the help they need from the expert qualified in that space, and they'll communicate back with me. That way, you have two experts that specialize in their own areas, so you're being taken care of from multiple points. And because we communicate behind the scenes, nobody's left in the dark when it comes to different type of planning strategies, so which means a lot less mistakes going forward. The same is true when we talk about estate planning. I have attorneys referred to. I have clients that want to access equity in their home. I've got mortgage brokers that we can refer them to figure out what strategy works best for accessing equity in people's homes. So what you're looking for is someone that you can pay a fixed fee to. They're not employed by a large company. Most of these guys are going to be self-employed. They don't have their own planning fees. They don't require you to move money to them or buy products from them. They're just there to be an independent consultant to help you guys get to where you need to be. And if you want to join the private community where I'm going to be sharing a lot more information and I'll have more courses going into that as well, the link to join will be in the description below. Also, if you just want to hop on a call to jump right into your questions, I always have to do that as well. The link to schedule a call with us is in the description below as well. And until next time, remember that your future depends on what you do today.